Did you know that since 2000, the average 401k has lost purchasing power 3 separate times due to market crashes and inflation? While your account balance might show growth, your actual buying power for retirement has been quietly eroding. What if I told you there's a retirement strategy that has protected wealth for over 5,000 years, and it's completely legal to move your existing 401k into it? Today, we're talking about why precious metals experts are sounding the alarm bells for American retirees. I'm going to share something with you today that could fundamentally change how you think about retirement security. We're going to cover exactly what a silver and gold IRA is and how it works. You'll learn about the specific economic threats facing traditional retirement accounts right now. I'll walk you through the complete process of how these accounts work, including tax implications. We'll look at real historical data showing how precious metals have performed during economic uncertainty. And finally, I'll give you a clear roadmap for getting started if you decide the strategy makes sense for your situation. This isn't about getting rich quick. This is about protecting what you've already worked decades to build. By the end of this video, you'll have the knowledge to make an informed decision about whether precious metals belong in your retirement portfolio. Let's start with the basics. A precious metals IRA is simply a self-directed individual retirement account that holds physical gold, silver, platinum, or palladium instead of stocks and bonds. It follows all the same IRS rules as your regular IRA. Same contribution limits, same age requirements, same tax advantages. The only difference is what's actually inside the account. Instead of owning shares of companies, you own actual physical metal. Now here's what's important to understand. You don't keep this metal in your home safe or under your mattress. The IRS requires that all precious metals in retirement accounts be stored in an approved depository. These are highly secure, insured facilities that specialize in storing precious metals. Think Fort Knox level security. Your metals are segregated, meaning your specific coins and bars are kept separate and identified as yours. You get regular statements showing exactly what you own and where it's stored. When it comes to what metals qualify, the IRS has strict purity requirements. For gold, it must be 99.5% pure. Silver must be 99.9% pure. This means most collectible coins don't qualify. We're talking about investment-grade bullion coins and bars. Popular options include American Silver Eagles, Canadian Maple Leafs, and various gold bullion products from accredited mints. The process works through what's called a rollover or transfer. If you have an existing 401k, 403b, or traditional IRA, you can move those funds directly into a precious metals IRA without any tax penalties, as long as you follow the proper procedures. This isn't considered a withdrawal. It's simply moving your retirement money from one type of account to another. The key difference from your traditional retirement account is stability. While stock prices can swing wildly based on company performance, market sentiment, or economic news, precious metals have maintained their value throughout human history. They're not tied to any single company's success or failure. They're not dependent on government policies or corporate earnings reports. Here's what's keeping retirement experts awake at night. We're facing a perfect storm of economic challenges that directly threaten traditional retirement savings. First, let's talk about inflation. The official inflation rate might say 3 or 4%, but if you're buying groceries, paying for healthcare, or dealing with everyday expenses, you know the real number feels much higher. Inflation is a silent thief that steals purchasing power from your savings account every single day. A dollar today buys significantly less than it did just 5 years ago. Now consider this. Most traditional retirement accounts are heavily weighted in stocks and bonds. When inflation rises, the Federal Reserve typically raises interest rates to combat it. Higher interest rates make bonds less valuable and often cause stock market volatility. Your retirement account gets hit from both sides. Then we have the national debt situation. The United States now owes over $33 trillion. That's trillion with a T. To put that in perspective, that's more than $100,000 for every single American citizen, including newborn babies. How does government typically handle massive debt? Throughout history, they've devalued their currency. They print more money, which makes each existing dollar worth less. The baby boomer generation is retiring in record numbers. Every day, approximately 10,000 Americans turn 65. This massive demographic shift is putting unprecedented strain on Social Security and Medicare systems. Many experts believe benefits will need to be cut, or taxes will need to be raised dramatically. Either way, retirees feel the impact. Let's look at some real numbers. In the year 2000, if you had $100,000 in your 401k, you'd need approximately $165,000 today just to have the same purchasing power. That's a 65% increase just to break even against inflation. But here's the scary part. Many 401k accounts didn't even achieve that level of growth when you factor in the 2008 financial crisis and the market volatility we've seen since. Banking system instability is another major concern. We've seen major banks fail recently, and while FDIC insurance protects deposits up to $250,000, many retirees have significantly more than that in their total retirement savings. What happens to accounts above the insurance limits if the banking system faces serious stress? Now let's dive deep into how precious metals IRAs work as a solution to these problems. The process starts with opening a self-directed IRA account with a custodian who specializes in precious metals. Not all IRA custodians handle physical metals, so you need one that's specifically equipped for this. The custodian acts as the administrator of your account, handling all the IRS paperwork and compliance requirements. Next, you'll work with a precious metals dealer to select your specific metals purchases. This is where education becomes crucial. You want to work with dealers who focus on IRA-eligible products and can explain the differences between various options. Some products have lower premiums over the spot price, meaning you get more metal for your money. Others might have better liquidity, meaning they're easier to sell when the time comes. The actual purchase process is straightforward. Your custodian receives your funds from the rollover or transfer. They then send payment to the metals dealer based on your instructions. The dealer ships the metals directly to the approved depository. You never physically handle the metals during this process, which keeps everything IRS compliant. Storage costs typically run between $100 to $300 per year, depending on the value of your holdings and which depository you use. This fee covers insurance, security, and segregated storage. Some people worry about these ongoing costs, but consider this. Traditional 401k accounts often have annual fees of 1 to 2% of your total balance. For someone with $200,000 saved, that's $2,000 to $4,000 per year in fees. Storage costs for precious metals are usually much lower. Let's talk about taxes because this is where many people get confused. If you're doing a direct rollover from an existing retirement account, there are no immediate tax consequences. The money moves from one retirement account to another, maintaining its tax-deferred status. You'll pay taxes when you eventually take distributions, just like with any traditional retirement account. However, the tax treatment can be more favorable in some situations. When you take distributions from a precious metals IRA, you have options. You can take the physical metals themselves, or you can have the custodian sell the metals and send you cash. This flexibility can be valuable for tax planning purposes. One important consideration is required minimum distributions, or RMDs. Just like traditional IRAs, you'll need to start taking distributions at age 73. With precious metals, this typically means selling a portion of your holdings each year to meet the requirement. The custodian can handle this process for you. Contribution limits are the same as traditional IRAs. For 2024, you can contribute up to $7,000 per year, or $8,000 if you're over 50. But remember, most people using precious metals IRAs are doing rollovers from existing retirement accounts, rather than making new contributions. Eligibility is straightforward. If you have an existing 401k, 403b, traditional IRA, or Roth IRA, you can potentially move some or all of those funds into a precious metals IRA. You don't need to be retired or separated from your employer for most types of rollovers. The timeline for setting up an account typically takes 2 to 3 weeks. The actual rollover process, once your account is established, usually takes 7 to 10 business days. During this time, your funds are in transit, so you're not missing out on potential gains or losses in your old account. Let's examine the historical evidence for precious metals as a retirement protection strategy. Over the past 50 years, during every major economic crisis, precious metals have either maintained their value or increased significantly while other investments suffered. During the 1970s inflation crisis, when the stock market was stagnant and inflation reached double digits, gold increased from $35 per ounce to over $850 per ounce. That's more than a 2,000% increase during a decade when many other investments lost money. In the 2008 financial crisis, while the S&P 500 lost 37% of its value, gold actually gained 5.5% that year. Silver, while more volatile, has also shown strong performance during economic uncertainty. From 2008 to 2011, silver increased from under $10 per ounce to nearly $50 per ounce. Even after pulling back, it maintained significantly higher levels than pre-crisis prices. But let's be realistic about expectations. Precious metals are not get-rich-quick investments. They're insurance policies. Their primary value is preservation of wealth, not wealth creation. Over very long periods, gold has roughly kept pace with inflation, maintaining purchasing power rather than creating dramatic returns. Here's a real case study that illustrates this principle. In 1980, the median home price in the United States was $64,600. Gold was trading at about $615 per ounce, so you could buy a median-priced home with approximately 105 ounces of gold. Today, the median home price is around $400,000 and gold trades around $2,000 per ounce. You can still buy that median home with about 200 ounces of gold. While the dollar amounts changed dramatically due to inflation, gold maintained its purchasing power relative to real assets. Central banks around the world are increasing their gold reserves at the fastest pace in decades. In 2023, central banks purchased over 1,000 tons of gold, the second highest annual total on record. These are the same institutions that manage entire countries' monetary systems, and they're choosing to hold more physical gold. Countries like China, Russia, and India have been particularly aggressive in building gold reserves. This suggests that even government financial experts see value in precious metals as a hedge against economic uncertainty. Several prominent financial advisors recommend allocating 5 to 10% of a retirement portfolio to precious metals. This isn't about putting everything into metals, but about diversification and protection. Even conservative financial planners acknowledge that some allocation to assets that aren't tied to traditional financial markets can provide valuable portfolio insurance. Independent studies have shown that portfolios with modest precious metals allocations often experience lower volatility during market downturns. The metals component doesn't eliminate all losses, but it can reduce the severity of portfolio declines during crisis periods. If you're considering a precious metals IRA, here's your step-by-step action plan. First, educate yourself thoroughly. Don't rush into any decision involving your retirement savings. Take time to understand the process, costs, and implications. Read multiple sources of information. Talk to financial professionals who understand precious metals IRAs. Make sure you're comfortable with the concept before moving forward. Step 2 is evaluating your current retirement portfolio. How much of your savings are in traditional stocks and bonds? How would your retirement be affected if markets decline significantly? Consider precious metals as one component of a diversified strategy, not a complete replacement for everything else. Step 3 involves finding reputable companies to work with. You'll need both a custodian for your IRA and a dealer for purchasing metals. Look for companies that have been in business for many years. Check their Better Business Bureau ratings. Read customer reviews, but be aware that both extremely positive and extremely negative reviews might not tell the whole story. Ask about all fees upfront. Reputable companies will provide clear written fee schedules. Be wary of companies that aren't transparent about costs or that use high-pressure sales tactics. Legitimate precious metals companies will encourage you to take time to make your decision. When evaluating custodians, ask about their experience with precious metals IRAs specifically. Some general IRA custodians offer precious metals services but don't specialize in them. You want a custodian who handles these accounts regularly and understands all the regulations. Ask about storage options and costs. Different depositories have different fee structures and insurance coverage. Some offer segregated storage, where your metals are kept completely separate. Others use allocated storage, where your metals are identified as yours, but may be stored with others. Understand the difference and choose what makes you comfortable. Red flags to avoid include companies that guarantee future prices or returns. No one can predict what precious metals will be worth in the future. Be cautious of companies that pressure you to buy rare or collectible coins for your IRA. These typically have much higher markups and may not be as liquid when you need to sell. Avoid companies that discourage you from consulting with other financial advisors or that want you to make immediate decisions. Timeline expectations are important. Setting up your account typically takes 2-3 weeks. The rollover process usually takes 7-10 business days once initiated. Purchasing and storing metals adds another few days. Plan for about a month from start to finish for your first purchase. Remember that you can start small. You don't need to move your entire retirement account at once. Many people begin by rolling over a portion of their savings to test the process and get comfortable with precious metals ownership. You can always add more later. Finally, maintain realistic expectations. Precious metals, IRAs, are defensive strategies, not aggressive growth investments. They're designed to preserve wealth and provide portfolio diversification, not to generate high returns. Think of them as insurance for your retirement savings rather than a path to quick profits. Let's recap what we've covered today. Traditional retirement accounts face unprecedented challenges from inflation, economic instability, and demographic pressures. Precious metals IRAs offer a time-tested way to diversify your retirement portfolio and protect against these risks. The process is straightforward, legal, and follows the same tax rules as traditional IRAs. Historical evidence shows that precious metals have maintained purchasing power through various economic crises. While they're not guaranteed to make you wealthy, they've proven effective at preserving wealth when other investments struggled. If you're between 55 and 70 years old, you've worked too hard and too long to see your retirement security threatened by economic forces beyond your control. You deserve to sleep well at night knowing that at least part of your retirement savings is protected by assets that have held value for thousands of years. The next step is education. Take time to research precious metals IRAs thoroughly. Speak with qualified financial professionals who can evaluate your specific situation. Don't make any quick decisions, but don't ignore the warning signs in our economy either. Your future self will thank you for taking action to protect your retirement security today. Remember, this information is educational only. Every person's financial situation is unique, and you should always consult with qualified professionals before making investment decisions. But now you have the knowledge to ask the right questions and make an informed choice about whether precious metals belong in your